Joining me now, post 9, is Chris Verrone of Strategas. Good to see you again.
Great to be here, Scott.
I mean, maybe the outlook for the sector was different 2 days ago than it is now, given what China's doing. You tell me.
I disagree. I mean, I think this has quietly been a leadership sector for 2 years. If you go back to when the relative turn really began, it was actually summer of 2022. So we've had 2 years of industrial leadership preceding what I now think is the next tailwind, maybe a hint of stimulus from China. And if you think about industrials in context of all this soft landing talk we hear, and one of the things I would push back on is the question, do you think we're going to have a soft landing? I would say industrials have been telling us for 18 months, we've been in a soft landing. Will it persist? So if you're going to change or deviate from the status quo, wouldn't it involve the most consistent group over that time weakening? And we just haven't seen it yet.
I mean, unless it's to come, right? Unless
certainly.
Whatever's going to happen with the economy, as some suggest it still is to happen, actually does.
I thought what was notable last week, if you look at the new high data, what sector had the largest expansion in new highs? Industrials. Look at Caterpillar, Cummins, Carrier, URI. And then if you look within industrials, it's actually the more defensive names like Waste Management, Republic Services actually weakening. So there is a pro-cyclical tone continuing to come from this industrial sector, and until it changes, I'm still inclined to believe this is the leadership fabric of this market.
You sound pretty bullish.
I'm bullish on industrials, and
well, I mean, if you're bullish on industrials, are you not bullish the overall market?
Well, I think you have to be. What's the most important?
Kind of my point.
Yeah. What's the most important piece of information the last week? New S&P high. What's the second most important piece?
Fed cut 50 basis points. I would say was the first most important thing.
Sure. But it's continuing to be reinforced by industrials pretty good. Financials on balance generally act okay. Discretionary still outperforming staples. Until what I think those tenets of soft landing have been for the last 18 months, until they change, until credit weakens, until banks break down, until industrials roll, I think you have to maintain the status quo here.
The interesting thing has been the movement in gold, which we've been talking about for a while because it's been trading around record highs. I asked Jeffrey Gundlach about it last week on Fed Day when we were out at Double Line in Los Angeles. Listen to what he said, and we can talk on the other side.
I continue to hold gold, and I would dollar cost average into it at these prices. I mean, we're close to the highs of all time. And so, but the setbacks are very small. It's symptomatic of a market that is in accumulation mode. And I think that the path of least resistance for gold continues to be up.
Okay, that's the Gundlach perspective. What's the Verrone?
We share a similar view. I think if people went back and looked over the last 18 months since the big NVIDIA quarter back in May of 2023, they would be shocked to know that gold and the triple Qs have given you the exact same return. So concurrent with this big tech story, there's been an equally as compelling story from the precious metals. What I think is timely right here is silver finally starting to wake up. And if you look at particularly some of the miners or even some of the junior miners, big breakouts over the last couple of weeks from very, very kind of long bear markets. So I think this turn in gold, which has been the case for the last 18 months, it continues. I think the status quo continues. If there's one thing I might be a little bit mindful in the near term, some of the sentiment the last week or two I think is getting a little on the hotter side. If you got to pull back 2450, 2500, I think is very good support. I'd be a buyer there.
What's going on with rates? Right? It was noticeable, obviously, if the Fed makes its move and rates went up.
Yeah.
And they've been higher now than they were before the Fed made its move. Where are they going from here? What's this telling us?
In some places. I mean, we've seen 10s and 30s bounce in yield. 2s are basically on the lows.
I'm really talking about 10s and 30s.
And I think we should. That's the more important part of the curve. If yields are going to send a message that the economy is set to weaken or about to weaken, I would expect you to see that from the 30-year yield. Draw a line at 390 on the 30-year yield. You start to undercut 390, I need to begin to question the whole idea that kind of the soft landing narrative is intact. What I would point out, I think you've noted this, Scott, look at the European yields. They're right back on the lows, in many cases undercutting the lows. German 10s, German 2s in particular, that's where I think kind of our attention would have to turn for maybe more imminent risk.